Wall Street spent 2 years arguing about whose GPU is fastest. On June 15th, AMD quietly ended that argument the way you'd least expect, by buying a company that turns cheap flash storage into something the entire AI industry is starving for. Here's what most investors missed last week. AMD's stock barely moved. A lot of people saw a red day on the tape and called it a pullback, and they moved on. But underneath that quiet day, AMD made two moves in about 48 hours that don't fit the story Wall Street has been telling about artificial intelligence. The story everyone believes is simple. AI is a compute race. More GPUs, faster chips, Nvidia on top, AMD a distant second. That story's getting old, because the thing actually slowing AI down right now isn't compute. It's memory. And on June 15th and 16th, AMD bought its way straight into the middle of it. So let me show you exactly what they did, why it is aimed directly at Nvidia, and what it actually means if you own AMD, or you're thinking about it. For 2 years, the entire AI conversation has been about one number: raw GPU performance. Whose accelerator trains a model faster? And while everyone was staring at that, two cracks opened up. The first is fear. You've seen the headlines about companies quietly slowing or cancelling data center build-outs, and a loud part of the market now thinks the whole AI infrastructure trade is a bubble waiting to pop. The second crack is more technical, and it's the one that matters. Modern AI systems are increasingly bottlenecked, not by how fast the chip computes, but by how fast and how cheaply you can feed it data. That's the memory wall. High-bandwidth memory has become one of the most expensive and most supply-constrained pieces of the entire AI stack, and you can't just buy your way out of it, because the fastest memory is largely spoken for. So let me ask you something before we go further. If the real bottleneck was never the GPU, how much of the AI trade is priced on the wrong thing? Hold that thought, because AMD just placed a very large bet on the answer. On June 15th, AMD announced it had acquired a startup called MEXT. Not MIPS, not a chip company. MEXT builds software. And what that software does is the whole point. MEXT makes cheap NAND flash storage look and behave like DRAM, the fast, expensive main memory that AI servers run on. It does this with a predictive engine. It watches how a workload accesses memory, uses an AI model to guess which data the system will need next, and pulls that data up from flash into fast memory before the application asks for it. The numbers AMD is pointing to are the reason this matters. The pitch is roughly a 50% cut in server DRAM cost, 2 to 4 times more usable memory capacity, with no new hardware installed on existing servers in under 5 minutes, and it runs on-premise or in the cloud, including AWS and Google Cloud. Think about what that means. The single most expensive, most scarce part of an AI server, and AMD is claiming it can stretch it dramatically with software you bolt on. That is not a faster chip. That is an attack on the cost of the entire system. Here's where it stops being a science project. 1 day later, on June 16th, AMD and Rackspace signed a definitive agreement for a 30-megawatt AI compute deployment across Rackspace's global data centers, phased from late 2026 through 2028. This wasn't a vague press release. It converts a memorandum of understanding the two had announced back on May 7th into a binding commercial deal. It's built on AMD's Instinct MI355X and MI350RP GPUs plus EPYC CPUs, packaged as what they're calling an enterprise AI cloud, and it's aimed squarely at regulated industries, with healthcare named as an early interested buyer for clinical AI work. Why does pairing these two moves matter? Because software alone is a promise. Software plus a real contracted enterprise footprint is a go-to market. AMD now has a cost-cutting memory layer and a place to actually sell it. That combination is what turns a clever acquisition into a strategy. Everyone tries to beat Nvidia by building a faster GPU, and almost everyone fails, because Nvidia's real moat isn't only silicon. It's CUDA, the software ecosystem that locks developers in. So AMD is doing something smarter than a head-on fight. Instead of trying to outmuscle Nvidia on raw performance, it's attacking total cost of ownership. The pitch to corporate America becomes, you don't need to buy the most expensive, most scarce hardware on Earth to run your AI. You can run heavy enterprise workloads on an AMD rack with MEXT stretching your memory for a fraction of the capital. And critically, AMD is building this into its own data center software platform, ROCm, so it becomes a reason to choose AMD's ecosystem, not just its chips. That's the asymmetry. Nvidia wins the speed war. AMD is trying to start a different war entirely, one fought on price and efficiency, on a battlefield Nvidia hasn't been defending. Now, I'm not going to sell you the dream, because there are real reasons this might not work, and you should know them. The hard problem is physics. Flash memory is slow compared to DRAM. DRAM responds in nanoseconds, flash responds in microseconds, thousands of times slower. MEXT's entire value depends on its prediction engine guessing right almost every time. Guess wrong, and the GPU sits there idle, waiting for data, which destroys exactly the efficiency AMD is promising. That's why this is targeted at enterprise inference and agentic workloads, where access patterns are more predictable, and not at the frontier model training that grabs all the headlines. On top of that, taking a small startup software and validating it across massive corporate cloud environments is a serious engineering and trust hurdle. So this is optionality, not a sure thing. If you hear someone say MEXT instantly dethrones Nvidia, that person is selling you something. The honest read is that AMD opened a credible second front, and now it has to execute. Let's ground this in the stock, because that's why you're here. AMD is a roughly $900 billion company right now, trading near the threshold of becoming the next trillion-dollar name. It's already up over 350% in the past year, and a large chunk of that move happened in just the last month. So understand the setup. A lot of optimism is already in this price. The MEXT and Rackspace moves don't change AMD's earnings tomorrow. What they change is the story's surface area. AMD now has a second way to win that isn't just GPU share. And at this valuation, the question isn't whether AMD is a good company. It clearly is. The question is whether this memory strategy actually ships and scales. So here's what I'd watch, and this is the part to judge for yourself, not take as a forecast. Does MEXT actually land inside ROCm and into shipping products, and does the Rackspace deployment expand past that first 30 megawatts? Execution on those two things is the difference between a clever headline and a real second engine. So let's bring it back to the question from the start. If AMD is right that the next phase of AI is one on memory efficiency and cost, then the company everyone calls Nvidia's runner-up just opened a second front Nvidia wasn't guarding. If AMD is wrong, it's an expensive software bet bolted onto an already expensive stock. Here's the real question I want your take on. Is software-defined memory a genuine crack in Nvidia's armor, or just a clever way to lose money slower? Tell me in the comments, because I read them. And if this reframed how you think about the AI trade, subscribe. This channel breaks down one company at a time, no hype, no noise, just the analysis. I'll see you in the next one.